Welcome. My name is Van Richards. I'm a chartered financial consultant, and today we're talking about a utility stock. We're talking about New Jersey Resources. So let's go ahead and begin in today and do the daily stock analysis. I'm taking a little bit different approach on this today because I want to go over a utility stock that's actually fairly undervalued in my opinion. And I want to show you, I want to take the standard route that we normally do when we look at the stability, the earnings, and the competitiveness of the stock. But what we want to do is also look a little bit of it from a technical standpoint. I'm not a real big fan of technical analysis, but I think that you're going to see that toward the end here, when we look at a couple of the different graphs, that you're going to see that there's a big difference. And if you're listening to this rather than watching, don't worry, I'll describe everything that's going to go on for you today. But before I begin into this, I want to remind you that I am a financial planner. I have a company called Richards Financial Planning, and I've designed a process that can help people that are frustrated with their finances to get on the right track. You know, there's a lot of people out there that are making good incomes, six-figure incomes, but they really don't have any cash flow. They don't have any savings. Look at what the pandemic did to everybody. There was a study that was done in 2019 that showed that the average person would not be able to pay for a $400 emergency if it occurred. I have a plan that I put together called the Prosperous Planning Process, and I can help people do that. If you want to find out more about that, go over to richardsfinancialplanning.com and you'll learn all about it. Go all the way down the end of the page and you'll get a great deal of information. You'll find out about how everything works. Now, I only offer this personally to residents of Texas because that's where I'm at. But no matter where you are in the world, read through this information because this is going to help you, and go out and find yourself a good financial advisor in your area and work with them. One that is a fiduciary, one that doesn't get paid, you know, the commissions on the securities to be able to do work for you. All right, let's go ahead and begin in today. Rather than talking about me, let's talk about New Jersey Resources. Now, the price that you see here is just a little bit different. I prepared this about noontime, and it shows that the price is at $33.10. It actually ended a little bit higher than that. It ended at $33.23. But what I want to do is this. If you're just listening, this is going to go through some of the highlights of actually what New Jersey Resources does. And you might be saying to yourself, well, they're a utility. They supply power. Well, they're a specialty utility. They're not exactly like many of the others. And when you start looking at utility stocks, you have to understand that they have particular emphasis. There are utility stocks that emphasize nuclear energy. There are utility stocks that emphasize coal energy. There are utility stocks that emphasize sustainability. And that's what New Jersey Resources is, and you're going to find out a little bit more about it as we go through that stock today. So let's go ahead and begin. 65% of revenue comes from gas. That's the biggest thing that they do. They have other services. They beat their earnings this year, but they had, over years, they had some losses in itself. Now, the company itself is at $3.16 billion. Now, to you and me, that might seem like a whole lot of money, but when we're talking about companies, publicly traded companies, that's actually considered a small cap company. And based on the fact of the way that the valuation is, it is actually considered a value stock. Now, there's two things that are going to be working to the advantage of this particular stock. And I'm going to take a real quick moment and I want to talk to you about that. In this particular stock, being a small stock, we're in December. Now, there's an anomaly that usually happens in January. Now, an anomaly is something that happens just because it happens. It's out of the ordinary. It's not guaranteed that it's going to happen, but in past years it hasn't, and every indication is this year will be the same. Now, what am I talking about? What I'm talking about is the January effect. In January, you will traditionally find that small cap companies advance more than large cap companies. Now, we're just going to have to see how all this works. With Tesla going into the S&P 500, it's actually increased the volatility of that index considerably. So we'll see how all that's going to work out. We had expected that when they go into the index that it would be more. I'm talking about Tesla just for a real quick moment. We had expected when it went into the S&P 500 that there would be more volatility. Today was an up day in the market, so maybe it's just a lot of over precaution from that point of view. But when we're talking about small stocks, January is traditionally a great month for small stocks. Now, we're also talking about a value stock. When I talk about a value stock, what I mean is a stock that's actually trading below what its fair market value is. And we're going to talk about that a little bit more as we go through today with the information. So let's look at actually what the company did and look at the details just a little bit more as I get going on to the next screen there. Okay, and remember that every day, the way the approach is that we take towards stocks is we look at three different things. We look at the stability of the stock, we look at the earnings, and we look at the competitiveness of the company. We also begin by looking at the moat of the company. Remember, now this is actually what a moat is. Now, if you're listening rather than watching and you heard that great piece of music that was played, basically what I was doing is describing to you what a moat is. And a moat is that imaginary barrier that stands in between a company and their competitors. And this is a thought that's been popularized by Warren Buffett. He uses it a lot in his investing techniques. Now, what's the big competitive advantage right now that New Jersey Resources has? The biggest thing is that they have a network of gas transmission lines and a service that is extremely difficult to replicate. So you're not going to have a competitor that's going to come in and take away their business from that viewpoint. They also have a service territory monopoly that's actually given to them by the government, and the government actually sets their rates. Now, the regulatory caps can be a deterrent to profitability because they can't just raise their rates as much as they want to. And when we get to talking about the bulls and the bears in just a few minutes on what those different analysts are saying, we'll talk about that just a little bit more. But as we go further into this, we want to look at actually what's happening inside the company. Now, they had revenue of $400 million in the past year over year, the physical year. Now, remember, I want to remind you that I used to always, before I got into finance, I got confused by this. The difference in between a calendar year and a physical year, it's FISCAL. Physical is actually going to be from the third quarter of this year to the third quarter of next year. Okay, that's the 3-month increment. So it actually ended in November. They're into the beginning of 2021 already. Gee, lucky them. They missed their year over year profits by 16.5%. That means that they missed by $301.52 million. Now, here's the real surprising thing. A company can actually have a reduction in income, but still be profitable. So when we look at the non-GAAP and the GAAP earning per share, remember GAAP stands for General Accounting Principles. That's something that's a federal basis that these companies have to go by in the reporting. When we look at the non-GAAP earnings, they beat the estimates by 1 penny. They were at 57 cents a share. But when we actually put in the accounting magic and do the GAAP earnings, it comes out that they missed it by 7 cents at 45 cents a share. Now, when we drill down just a little bit, though, when we look at this, not just in the fourth quarter, that's the fourth physical quarter, not the fourth calendar quarter, remember. When we look at the physical year of 2020, their net earnings were at $2.07, which is actually higher than it was in 2019. In 2019, it was $1.96 per share. Drilling down a little bit more into this, we look at that and say, what's going to be going on in the future year? And there are companies that come out with guidance, and actually New Jersey Resources did come forward with guidance and said that they really expect earnings to go up in the coming year, actually the coming years. They're looking for earnings guidance in between 6% and 10%, and that's actually up from between 6 and 8%. But I have to remind you, guidance is not a guarantee. It's what the company is expecting to do. There's no guarantee on that. Now, what the analysts are saying is a little bit more conservative, which is usually pretty normal. The analysts aren't going to go along with what the company says. The company is going to paint a rosy picture for its shareholders, which is their job. But the analysts really pare it back just a little bit, and they think, whoa, just a minute. I think that the earnings on this company is really going to be more like about 6% rather than 6 to 10% or 8 to 10%. But remember, opinions are also not guarantees, and they're just analyst opinions. One difference that may be happening with New Jersey Resources going forward, which would be a positive thing, is that they're planning over the next 4 years to invest $850 million in clean energy. Now, that is a departure from what they have been participating in. And I think that some of this is based on what regulations may be coming. If we have a new administration in Washington, traditionally with energy companies, that means that there's a lot more regulation. So they will be departing from a lot of the midstream projects. And one of them that may be the first to go is going to be the Penn East project. Now, if you go over to if you look up the Penn East project, what you're going to see is you're going to see a pipeline that goes from Wilkes-Barre, Pennsylvania, down to Trenton, New Jersey. And New Jersey Resources had initially planned on participating into that and investing about 20% of the total input into that particular midstream infrastructure growth. And that was going to be about $1 billion. And that's kind of on hold right now. But let's get to the best part. Let's see what the bulls and the bears of the analysts are actually saying about this company. The good thing is New Jersey Resources is continuing to grow because New Jersey is continuing to grow. And New Jersey traditionally has a little bit higher, wealthier income individuals that live there. Think of it this way. A lot of people cross over the river from New York to live in New Jersey because they don't want to live in the city. The same thing might be true with living in New Jersey and going to Philadelphia. I have a friend of mine that his father worked for an insurance company. He lived in New Jersey and commuted to Philadelphia every day. So that's not an unusual circumstance in there. New Jersey's continuing to be a bedroom community that's continuing to grow. And for a utility, that's a great thing. Also, the payout ratio, a bullish aspect of New Jersey Resources is as they accumulate cash, they pay it out in dividends. We're going to talk about the dividends here in just a minute. They also have had 2 rate approvals from regulators in, let's say, since 2016. And that's actually pretty good. Okay, let's look at the negative aspect. What are the bearish analysts saying? Higher interest rates could possibly hurt earnings. Now, let me explain this to you real quick if I could. When we're talking about interest rates, a lot of you out there who are investing in utilities, you may be investing in utilities because you want an alternative to bonds. But I want you to understand that bonds and interest rates are going to affect the valuation of utilities, and they're going to move more in tandem, correlation in itself. Now, that's not a guarantee that's going to happen. I'm just telling you historically what's happened. So if interest rates go up, which they are projected, we're looking at the 10-year treasury that is projected to go up in between 1.3 and 1.4 over the next year. If it goes up, we could actually see values on some bonds, including utilities. Now, I know utilities are not a bond, but the utilities move sometimes with the bonds. So we could see valuations move down if interest rates in the economy go up. So that might play against those particular growth opportunities that may exist for that company. Now, if we look a little bit further, as we go into the winter, we're also going to see commodity prices fluctuate dramatically. And yes, I know that their utility, they've actually got their gas purchased for the winter, but they buy contracts, and that can be affected by weather, and the length of the winter can make a big difference too. So weather and commodity prices do affect the valuation of the stock in itself, since it is a utility. The other thing is that $850 million that's supposed to be invested over the next 4 years into clean energy, a lot of that's going to go into solar energy. And the New Jersey Resources actually has one of the largest floating solar arrays in the country. So they've already got a foothold into solar energy and clean energy. And the point is that that's going to be extremely dependent on what the federal government does. If we see something close to the Green New Deal, this could be a big boon for this company. If we see not quite so much of an emphasis on infrastructure of clean energy, it could be a bust. Putting $850 million could not really impact their overall profitability going forward. So that is a bearish aspect in looking at what we're anticipating going forward. Now, let's look at actually evaluation of this stock and talk just a little bit about what analysts are saying. Now, I like using Morningstar a lot. I think that they're a wealth of information. I also think that they're one of the most dependable research sources that's available. They have a great staff. They're educated. They understand how that stocks work. They look at the intricacies, the details of the companies. They take a true fundamental analysis viewpoint on stocks. Now, when they look at a company like New Jersey Resources, they're looking at the earnings per share and they're looking at the valuation. Based on their estimates, if we're seeing this stock today at $33.23 per share, they're saying that the fair market value is really going to be $37. So that's actually a big boon for valuation. If you're looking to get into a stock that is not going to be a tech stock, it's not going to have advanced opportunities like a tech stock because of the government regulation and the price structure, getting in on the bottom side is a really great way to do that. And I want to take just a little bit more look at actually what historically has gone on from the fair market price. Now, remember, I like taking a look at stocks from a fundamental price standpoint. That's going to be something like, we're looking at the actual earnings. That's going to be a fundamental aspect of analyzing a stock. However, when we look at the technicals of a stock, we're looking at the patterns that have happened historically. And I don't put a lot of weight into candlesticks and those different types of analysis. However, what I'm showing you here on the screen, and if you're just listening to this, I'm going to describe it to you. I've gone back actually to 2010, and I'm showing you what the actual price of the stock is and the fair market price. Now, from 2010 until the beginning of 2020, we see that the fair value, that's actually going to be what the analysts are saying, has been lower than the actual value. Now, this year, that's flipped over. So what you are seeing, if you look at the graph, you are seeing actually the fair value, that's what the analysts are saying that the price is really should be, is actually higher than what the price actually is. So if you're looking at it right now, it says that the fair market value is at $37, and the last close on this chart was $33.03. Today it was actually $33.23. So this stock is actually trading underneath, and that hasn't happened for quite some time. And the chart that you're looking at goes back all the way to 2010. And this year is the first time that's ever happened. So what's that telling me? What that's telling me is, my opinion is that this stock is undervalued and it offers some good opportunity. Now, this is where I slightly depart from what some of the analysts are saying. The chart that I've put up here, actually, I have to apologize. If you're watching, this says VMware. That should not. I did not change that out. That should actually say New Jersey Resources. And when we look at the number of analysts that are covering New Jersey Resources, there's not a lot of them. And you're going to see that in a moment when we look at the actual numbers. But when we look at what they are saying, 2 out of 5 are saying, yes, this is a strong buy. However, we have one that's saying sell it, get out of the stock. And we have 2 of them that are saying just hold on. So when we average that out, it's actually that this is more of a moderate buy rather than a strong buy. How does New Jersey Resources compare to other companies? Now remember, the SEC that I always go by, the recipe that I tell you all that you should look at when you're looking at stocks, you look at the stability, the earnings, and the competitiveness. So we get to the competitiveness now. How do they compare? Now, remember before I told you that there are different types of utilities out there that specialize in certain areas. We wouldn't want to take New Jersey Resources and compare it to a company that does primarily nuclear energy. So what I did is I picked out 2 companies, 2 utilities that are close to the same size. They're a little bit larger than New Jersey Resources, and I'm comparing them. Atmos Energy is one, and NI Source is another one. And you'll see if you're looking at the chart, if you're just listening to this, what I'm going to describe to you is that all 3 of these stocks tanked during the coronavirus crash back between February and March. Who didn't? But going forward, New Jersey Resources has actually lagged the other companies in coming forward and in making profits and increasing back to where they were. Now, I think that's actually an advantage because we're looking at it from the standpoint that we want to buy low and sell high. So what are we looking at over the past year? A year ago, this stock was trading at $40.67, a little bit more. Today, closing at $33.23, that means that if you held this stock for a year, yep, you had a loss of 18.03%. And as I always say at this point, the past performance is no guarantee of the future performance. And hey, in this example where we had a negative 18%, you're hoping that it's not. Let's look at the picture. Let's draw this out just a little bit and go back 5 years. And take the coronavirus craziness of the market out of this and look at actually what's happened to the value of this stock over that time. And I really think that 5 years is the best time period because it includes a full market cycle. What do I mean by a full market cycle? Generally, bear markets are going to last anywhere in between 3 months and 18 months. And bull markets, that's where we're advancing, are going to last between 3 and 4 years. So I say that one full cycle is going to include a bear market and a bull market, and a full cycle is going to be generally about 5 years. So that's why I picked the 5-year time period. When I go back to December the 5th of 2015, I see that the price of New Jersey Resources was right at $25.62, a little bit more, 0.62. In that time period, it's had a total return of 29.69%, an APR of 5.34. APR stands for annual percentage rate. So that's like if you had a savings account and you earn 5.34% annually, that would be the same equivalent. Of course, it's not the same guarantees. With today's price at $33.23, that's actually been pretty good over the past couple of years for a utility. Now, look, something else to be very, very cognizant of in this particular stock is this. It's the dividend. Yeah, the dividend is at 4.03%. So if you had a 5.34 growth in value and you have a 4% dividend, really, in reality, you've got about a 9% rate of return from a utility stock. That's actually really pretty good. Now let's take a little bit more look and kind of wrap things up by looking at what the actual analysts are saying about this stock. This is not a a heavily followed stock. It's not a big company. It's $3 billion. So you've basically got about 5 analysts that are out there giving opinions on this stock. The most conservative analyst was really Bank of America, that said that they're looking at a target price on this of $28 to $29. So they're thinking that there's some more weakness that could exist and could come forward. And maybe, maybe not. Think of the dividend in there. If you buy into this and it goes down, your dividend is going to keep buying more. Now, I'm not telling you to go buy this stock, but I'm saying that it's undervalued. So it's a good opportunity for those of you that are looking for dividend stocks that are undervalued. Now, remember, today's value is at 33.23. The most aggressive analyst that's out there right now is Argus, and Argus has a buy on this, and they're looking at a value of $45 to $49. Remember, we're at 33.23 now. So I think that there's some opportunity out there. In my estimation, I really think that this stock has some room to grow. I think it's got some opportunities that are out there. Historically, if you go back through the video, or if you're just listening to this and you go back to the part where I talked about historically the technical analysis, when we look at it from 2010 until now, from 2019 through 2020, this company's stock has actually gone underneath what the fair market value is, and it really doesn't do that. So we are in an unusual situation, and that's why I think that this stock has a lot of room to grow to go forward. So I hope that this was information that was helpful to you. If you've got stocks that you'd like to learn about, let me hear about them. Put them in. Go over to YouTube to my channel at Richard's Financial Planning and give me your comments. Also, let me know where you're listening from. I enjoy hearing from you no matter where you are in the world. So I hope everybody has a great evening. If you have questions or comments, go ahead and put them in. And as always, stay tuned for the disclosure, because that's an important part. Have a good evening and come back tomorrow.